Hi, this is Bill Wood with Discipline Trading Decisions. We're looking at the ES, the S&P futures market. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Okay, on this monthly chart, you can see that we're trending up. Past couple of years, we've been in a trading range. This month's bar is an outside bar. This is very negative. Now, we only have a couple more days left. This is the 27th. We only have a couple more days left on this bar, and it's going to be very important how it closes. If it can close below this month's bar, that is very negative. If this leaves a large tail, then you know that there's still a bid under the market. But as it looks right now, that's a pretty negative sign. On the weekly, we have been trending up. We made a new high for the year, and then we came right back into range. Again, that is a negative. We had a bit of a balance going on here. We looked outside of balance, came back in. We've already achieved the target of the other side of this balance. Maybe you could say down here at 2012. We marked this 1960 from the monthly chart as maybe some support. On the daily, okay, we've had, I think, the biggest gap ever on Friday. Where do we get support down here? We might get support in this clump of trading that happened here. That was also support here. Let's see, what is that? That's 1982. This was the number from the month. And then you have this, which may cause support down here around 1940. On the 4-hour chart, you see where these line up. You see where this 1961 lines up, and this is a low volume area. This all up here has been one big trading range, and this would be the low volume separating it from this trading range. So this might actually be a good target or support here. On the profiles, one of the things that I was looking at was, you know, are we too much oversold? Well, what happened on Friday makes me believe that we're not oversold right now, because what had happened is we opened a big gap down, and what we did was we immediately retraced, and I believe that this was short covering here. So as far as being too short, oversold, I don't think that is necessarily true. First off, I think that too many people got caught long. That's why it was such a big down move. And at this point, they may have gotten too short, but they did cover. They brought it back pretty high from 28 or say 29 all the way up to 64. I think that covered some of the shorts. So it looks like all roads are pointing down, but you never know. That this market has had a bid under it. There was a lot of people thinking that we would make a new high. We did make a new high for this year, but there was a lot of people thinking that we would make a new all-time high, and that may be people just got that Brexit thing wrong, and so that's why we had such a strong move down. There were so many bets on the upside, and and they had to liquefy their longs. So we're going to have a pretty decent gap again today. I think we're at 2009. I think we got right down around 2000 overnight. 2009 we'll be having a gap. We'll see if we can get back in within yesterday's range and get acceptance up here. If not, number one, if it can't get back to yesterday's low, look out on the downside. I'm not saying that we'll get into the 1960s today, but maybe this week if we can't find buyers down here. So as the market goes lower, is actually looking for buyers, and where that'll happen, where actual support will be, where people will think that it's cheap enough to start buying, you don't really know. But we did find support around 2000. So that's my take on the market. It's going to be really important to see if we can find acceptance up within yesterday's range. If we can't even make it to yesterday's range, look out on the downside. Most everything is pointing down, but you never know if we went low enough so far to find buyers. All right, this is Bill Wood. If you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, you can go there now and check out some of our other resources. Have a great trading week.